All right, not too long of a video today. It's Sunday, September 8th, 4:50 p.m. Eastern Standard. Just preparing for the week, taking a look at what opportunities we are seeing in the markets. A lot of this is going to be outlined in my report, so not going to go into too much detail here, but we're seeing a lot of choppiness, and I think this is a really difficult market to trade when a lot of things are chopping around. And to really highlight like what is going on here in the markets, and the reason I say that it's difficult to trade, I want to point you to the Nasdaq chart here. Really, on the past, call it like 4 or 5 months, we went into this extended bull market, right, with the Nasdaq, which is a very, healthy bull market, very kind of predictable. There's, a little bit of dips and buying opportunities here, but very clear trajectory to the upside. And then you'll find that we started to sell off, right? And this is a pretty typical bearish reversal when we start to see these lower highs. So, right, we try to fight back and then we get rejected. We try to fight back. We don't quite reach the last high. And then we have this massive red candle sell off. Now, that was a pretty clear head and shoulders from what I had identified in a previous report. We have our head, shoulder, and right shoulder, and we had a big sell off. That concluded the sell-off, and then we saw what looked to be a recovery. And the big indicator was, are we going to break this right shoulder? Because that would be a bull sign for us, right? And what did we do? We broke right through it, and we broke past the right shoulder. So to me, that indicates a bull market. But then what has happened since we've broken above here? I mean, if we look on the daily from that right shoulder, from the second we broke above that, so call it, I don't know, what day is this that broke it? It's the 15th. So we had 1, 2, 3, 4 days trading higher, and then we immediately sold off, tried to fight back, sold off, tried to fight back, sold off, try to fight, and big red candle, big red candle. So it's really difficult for us to figure out the direction here that we're moving when that last shoulder that was negated, the head and shoulders was negated here when we broke above that, has indicated a bullish move, but we got bull trapped and we got rugged to the downside. So it's really difficult to know what direction the market is going to, fighting towards, and where we're headed. There's a couple things we know. That we know that the economic data is softening. We do know that prices are getting cheap in terms of energies. We know that prices are getting cheap in terms of precious metals, except for gold. Gold being near an all-time high, which makes sense as a safe haven metal. We see the US dollar getting crushed, which makes sense going into rate cuts. We would expect the dollar to be getting crushed, and we see other currencies trading stronger. That all makes sense. The thing that doesn't make sense for us, or I guess the big question that we have outstanding is, are we headed towards a bear market with rate cuts and the slowing economic data? To say that we're in a recession means that we need negative GDP, and that's not the case. So we are not in a recession as of right now, per the data, but the jobs and unemployment data doesn't look healthy. It looks great in a macro, but in recent times, it has not been looking as hot as we would like it to. So that pretty much leads to the fact that the Fed's going to have to cut rates. So we are shifting into rate cuts. But does that mean that that provides stimulus for the market to go bullish now that we're getting a softening and a shift in monetary policy? Or does that mean, hey, the Fed starts aggressively cutting because they're behind the curve, and because they're behind the curve, it's too late, and now we're going to have this hard landing, and it's going to be a recession at some point, and then the market sell off further? We don't know. There's two different, like very different scenarios that could play out there. So what do we do? Well, we continue to take a look at positions. We try to trade less in these types of markets because it is very difficult. I've actually reviewed some of my previous trades and found that I was over trading the past couple weeks, and this is a terrible market to be over trading. You end up losing money because you can be right and you can still lose money because the markets are just chopping all around. So what am I seeing right now? I want to enter a short on the euro. I believe it's a healthy position for us to enter a short on the open here. The euro having really climbed above its previous highs here when we actually had looked to short that in the past. Positioning is telling us that too many people have gone long on the euro. And what else is interesting is I'm bullish dollar. I'm not in a trade on the dollar, but I think the dollar has sold off pretty substantially to the point that these other currencies have had good rallies, and it may be time for a correction. I think it's time for the dollar to start rotating here as we've started to see a bit of a bottom, which is likely going to mean a reversion to the mean here on the euro. So possibly getting back towards this like 1.07 ish range, which is really like a key pivot point if we think about it. I mean, if we drew like a price level here, this is kind of a key pivot zone that we have seen on this price. So we're below it, we break above it, we bounce off it, we bounce above it, we stay, we break below it, we're back above it. We're in this big bullish market. I think we head back down to the mean here, kind of a mean reversion of the euro. So we're going to enter a short on the euro. I also like positioning this to short the yen if this could potentially be a double top. We don't necessarily know yet, and I also do not like the carry trade that's still being discussed here, which would be very bullish for the yen. I don't know. I mean, we maybe have a double top there, or we maybe have a top up here. I really don't know where the yen is going. Throw a bar up here, or a price level, really. That was back in December, which is interesting because we really just kept selling off until then. Really, it's kind of this. I don't really care what happened back in December because this was just us continuing to sell off beyond December. This was just a very bearish market until we had the squeeze. I would like to see a double top here. And if we do get a rejection there, I think we're going to go short on the yen, but hard to tell at this point. Time will tell. The other thing I like is continuing this kind of potential steepening trade between the 30-year and the 5-year bonds. So 5-year looking to go bullish. We're at highs. It's going to be kind of a tough trade to really make a lot of profit in, but it's more of a hedge towards the 30-year short, which does seem to be having some topping tails here and may potentially start rotating down, especially as everyone's already priced in the rate cuts, right? We've already priced in everything. I think this price is where it's supposed to be, and I think from a positioning standpoint, too many people have gone long the 30, and I think it's probably going to start to roll over here. It's at least what the price action showing us and the positioning showing us. So I like a pair there to go short. The other positions that I am finding really interesting, we actually lost on this trade on Friday, but I would like to get back in on crude oil. I think crude oil has gotten extremely cheap here, and I'd be looking to get in at a price of around $65 to $68 for a potential rebound. I think energies are at a really healthy low price. We actually had bullish data come out on crude inventories last week, and the price still sold off. So that's interesting to me, and I think we're eventually going to find a bottom here for a reversal. I just hope that we don't miss it. So anything energies except natural gas, even natural gas is starting to look long, but I like crude oil the most here, or RBOB, unleaded gasoline. And then the other trade that I am watching but currently not doing anything with is long the Dow. This currently looks, from a positioning standpoint, it looks good to go long. From a technical standpoint, this looks like it's going to the downside, so not much to do there. And then short on the NASDAQ, I think we've already potentially missed that short. I guess if we were to short, we would probably want to look for a stop around this high here at the 23% retracement, kind of the top of this new shoulder that's looking to have formed. That actually looks more of like a healthy shoulder here. We may actually have a lot more downside, so there may be an opportunity to short here on any pullbacks. So any pullback goes short, and then any pullbacks on the Dow go long is the thing being considered here. Other than that, I like platinum. We had a nice trade last week on platinum to make a quick $1,000 profit from 905 to 920 ish. If we see this rotate back down towards the low 900s or below, I would like to get long on platinum here. And same thing with palladium, but palladium I think has a bit of a ways to go lower. So that's what we're looking at. We'll talk next week, and or we'll talk on Monday and see what's playing out. Thanks.